Hi everyone, thanks so much for joining. We have a bit of a new setup today. We're going to look directly at some of our what you guys are looking for. So let's just dive straight in because we've got a huge amount on. As I mentioned, we have got a setup. We've got huge amount of event risk going on. So we have got the Fed meeting. We also have a Bank of England meeting, Bank of Japan meeting. We have earnings. We have US GDP, we have US PCE, we've got Eurozone GDP. So we've got to start somewhere. Let's start on cable. So I know some of you are really interested to know what's going on with cable, particularly as we lead up to the Fed meeting on Wednesday night and also the Bank of England meeting, which starts on Thursday. So two decisions, two slightly different outcomes, although neither of them are expected to change their policy stance. So this is cable, the pound versus the US dollar. As you can see, it has dropped below that 133 handle. Now, it's in the dollar essentially is holding quite a firm defensive stance versus the pound. As you can see here, it has fallen very, very sharply. This is a daily chart, by the way. And we are looking at a few kind of different levels, really. As you can see, we're below the 50 and the 100-day moving average. This essentially means that there is a bit of a bearish trend. It's going to be a bit hard to turn around. Currently trading at about 132.85-ish. The MACD is also looking into, obviously it's in downward territory, so it suggests that the trend is lower, momentum has gone to the downside, but we're not in oversold territory yet. I think that's something really, really worth noting. GBP, the pound, has been pressured by a few things, particularly against the dollar. The dollar is benefiting from safe haven demand because we did see those tensions over the last couple of weeks flare up again in the Middle East. So it's definitely tempered by that. There's also a rush to the dollar. So the dollar is getting that safe haven demand, which we will look at shortly. But there's also an upcoming central bank decisions. As I said, there's the Federal Reserve on Wednesday night. They're expected to remain on hold. So is the Bank of England on Thursday. However, it's all about, as it always is, how do they sound? What kind of vibes are they giving off? And the Federal Reserve is just meant to be more hawkish than the Bank of England. Right now, there is a 33% chance that the Federal Reserve will actually hike interest rates. Now, that has risen from a 10% chance. So there's been a bit more of a hawkish slant as we lead up to this Fed meeting, and that tends to put the pressure on the dollar, upward pressure on the dollar. But that's been the exact opposite for the UK. So, for example, 33% chance of a hike from the Federal Reserve on Wednesday, and yet there's only a 2% chance of a hike for the Bank of England. That lack of yield support, that lack of central bank propping up hawkish support, really, is what's playing out in this, as you can see here. Now, we expect the Fed potentially to lean a bit hawkish at this meeting, so we might not be done with the decline in the pound yet. The tech level to watch is very much. Let me just bring it up for you. It is the. Oh, sorry, bear with me, guys. It is the 132.50 level. So 132.50 is a key level that we've been watching. Comes up about here, just below there actually. It comes up just kind of around this level here if you follow my pointer. So we're approaching it really, really fast. As I said, we're currently trading about 132.85. We've sliced through those 250-day moving averages, as you can see here. We're just around about 133.50, around about 133.40 on the 50-day moving average. The fact that we've gone through there the last couple of days is worth noting. But we are seeing a little bit of hesitation around this 132.5 level. Again, as I said, I think that's temporary because just looking at the MACD indicator, that doesn't suggest that we are anywhere near overbought territory yet, but we are moving towards that. It has been a very sharp downtrend, so I would watch that. Obviously, it's not been as big. We haven't seen these big long candles like we've seen in the past. These are daily moves, by the way. But if we just go to a slightly shorter term move, as you can see, we are finding a little bit of a bottom above that 132 132.50 mark. And then in the very short term, we're looking at about 132.90 for some very short-term resistance there. If we can get back above there, that will springboard us back above that 133 level. But again, I find it very hard at the moment to see a big long-term shift in direction. If I go back to that daily chart, and the reason why, of course, is because we're leading up to that big event risk. So I certainly would say in the next 24 hours, I think we're going to be trading a bit sideways, but maybe some of that selling pressure will come off the pound. Now, another question that you guys asked was, what about the indicators? What indicators do we use? Well, I've kind of shown you essentially, but it's simple moving averages, which I always think are good. I like a good trend line as well. I'm going to take this one off just so you can see, essentially just see what's on offer from XTB. But again, we've got simple moving averages. We've got the 50-day and the 200-day there. They're my favorites, absolutely. And I'll go into some details about why. And then down here at the bottom here, you've got the MACD indicator. So looking at moving averages first, I don't think there's any single best indicator, by the way. It's a lot to do with personal choice, but I do think that some essential choices are moving averages. The 50-day, the 200-day, they help you to clearly see the direction of the market and the trend that the market is going in at the moment. And as you can see, because we're below both the 50-day and the 100-day and the 200-day moving averages, we're in a bit of a downtrend. We were in a bearish pattern here for the pound. And it's going to take a reversal back above these moving averages to change that direction. So right now, there's a lot of selling pressure on the pound, but we're not quite in oversold territory yet. Now, the MACD, which is obviously this at the bottom here, this indicator at the bottom here, that's a momentum indicator. And that what's really good about that, that also shows what the prevailing trend is, but it shows when something is overbought or oversold. And I think that really, really helps. Again, just to, get a grasp quickly, visually of what the market is doing. The other thing I love about moving averages, which just to switch back to the blue lines on this chart, is the fact that they immediately give you dynamic support and resistance levels. Remember, support levels are when you're will be below the current price and a resistance level is above it. So they're giving you that immediately. So I don't think you need, personally, I find too many lines on chart just really distracting. I love a daily chart. I know some of you like a much shorter term chart than that, but this will give you the overall direction. But I just think keep it simple, keep it to moving averages, and then a MACD, which just tells you maybe when the trend is just about to turn, or maybe it's got a bit stale. But that's where we are for now. Now, just going back to our charts, I just want to show you the dollar index, because the dollar index is looking really good as well, getting up to some really good levels on the dollar index too. I'm going to switch to a weekly chart. Now, bear with me, you day traders. I know sometimes you don't like it, but there's some key levels coming up, which I think are worth looking at. And that key level, as you can see here, is the 200-day moving average. So we're currently trading just below 101.50. That comes in at 102.39, so just below 102.40 at the moment. We've got a really nice trend. We seem to be breaking, at least testing the top of the range, which goes all the way back to September 2025. So we really are making some big progress in the dollar. That's been one of the key themes actually of 2026, has been a stronger dollar. Now that has massive ramifications for the oil price, but also for the gold price, which we will talk about soon. But I do want to draw your attention to that 102.40 level, 200-day moving average in the dollar index. That is going to be absolutely crucial for where the dollar goes next. If we can continue this upside momentum, and it is quite a gentle upside momentum. If I just go back to the daily chart, you'll see, you'll probably see that it's been gentle, but there definitely is a big trend there. As you can see, it's like they're not huge daily candles, but at the moment we have seen that, but we are seeing that this kind of consistent increase in the dollar, and we are on a daily basis anyway, we are coming up above the moving averages, which means that we are in a bullish trend, certainly in the short to medium term. And then it's a long-term shift. If I just go back to that weekly chart, if we can get above that simple moving average at 102.40, then that suggests a longer term bullish uptrend for the dollar, and definitely something worth watching. And as you can see, it doesn't really look overbought either based on the MACD, but you really want to look at MACDs on a daily basis. That's slightly more useful. So if you go back to a daily chart on this, as you can see, not looking too much either. Remember, the dollar is such pivotal cornerstone really of our financial system that when it's moving, you need to know about it, because it's going to ricochet across other asset classes, that is for sure. But I know some of you are really interested in gold as well. And just looking at the kind of gold outlook, I know that was one of the main questions that we looked at. So on a daily basis, as you can see, the gold has undergone a remarkable reversal in the first half of 2026, or really the first 7 months of 2026. So that was after it reached its record high in January 29th earlier this year. As you can see, it's just been kind of a step change down, really. Not much opportunity. This has been a really good downtrend. We haven't really got above it. The magnitude of the correction, I know that it has unsettled some of you. It's unsettled some of the broader market as well. But I think it could potentially be reframed as a bit of a pullback. And to look at that pullback, we're going to look quickly at the weekly chart, just so you can see what I mean. When you compare to the daily chart, where it looks like it's a relentless selling, the weekly chart for this year also looks relentless. We are below the 200 moving out, the simple moving average here, the 200-day moving average, which is worth pointing out. That comes in at $4,500 per ounce. But I think you could really reframe the gold decline over this year, well, since the end of January this year, as a bit of a healthy reset in the gold price, rather than the end of the long-term bull market, because we have been in a really long-term bull market. As you can see here, it's just been fantastic. Got a hell of a lot more volatile though, didn't it? As we moved through 2025 and certainly at the beginning of 2026, got really, really volatile there. But we are essentially in, I think we're going to trade sideways for some time. Now, there are a couple of issues with gold. The fair value of gold, actually, if you look at interest rates and US inflation expectations, is actually $4,563 per ounce as of the most recent data. But I think this decline that we've seen in the gold price really shows that the valuation premium has largely disappeared from gold. So people need to be less worried about it being really expensive to buy. It's had such a sharp decline. If we just look at it from a shorter time period, as you can see, the selling has been pretty much relentless, but in the very, very short term, we need to get back above 4,040. We're currently trading at 4,000, just above 4,030. We need to get up above about another $10 to get a more short-term macro uptrend, and then get to that 4,070 level, which I think will be really, really critical. But that then puts us above fair value. So we do need to watch it, but we are currently about $20 below fair value. So that certainly is something to watch. And I think that, you know, as that valuation premium has been eroded, and as it gets less expensive, as it's got less expensive over recent months, you tend to move back towards that macro story for gold. Gold, one of the key things that it didn't do was rally in any meaningful way or act as a safe haven during the Middle East crisis. So during a period of geopolitical tension, it did not act as a safe haven. And there are a few reasons for that. The dollar, remember, gold is priced in dollars. So when the dollar rises, gold tends to fall. So the other asset classes, you need less dollars to buy it. So that's one of the key macro factors that are weighing on the gold price. But there's also been what the Federal Reserve is doing. So the Federal Reserve has definitely shifted to a more hawkish stance. They've definitely paused their rate cutting cycle. I think we'll be, you know, any dovishness from the Fed could potentially be put to bed this week. And that's also weighing on the gold price and also limiting its upside potential. Now, there is a little bit of a shift, as you can see, even in the very short-term MACD. Is moving away from that downside momentum back to a very small bit of upside. But I do think that the upside will probably be capped around that 4,500 level. But again, I don't necessarily see this as the end of the bull market for gold, but I just don't think we're in the right conditions now to go back above $5,000 per ounce. I see that as being, you know, something that isn't really possible in the short term. But I think gold levels to watch, short-term consolidations, as I mentioned, for 4,040, then we've got the 4,070 mark, then we've got 4,100. I think 4,000, they're all resistance levels that I would watch. And I think that, as you can see here, 4,100, we did actually reject that yesterday. So that is now the next kind of short-term resistance, with that 4,000 level coming in as really key support because it's such a psychologically important level. But as I mentioned, 4,486, I think is about that 4,500 level. 4,486 is where we get, you know, essentially the 50-day moving average is. So we need to get back above there essentially for it to be kind of a slightly more bullish outlook. But I do think that in the short term, we do seem to be trending back towards that 4,100 level. But that's, you know, that there is quite a lot of upside to go to get to that fair value level. So we are below fair value at the moment, but I do think it's going to be a bit tricky to get above 4,100 while we are waiting for the Federal Reserve meeting. So let's just see how hawkish they are. If it seems like there's no one in control and they're quite neutral, then what we might see is just a bit less downward pressure on the gold price. So that certainly is something to watch. Now, I also want to go through the NASDAQ. I know that there's a lot of, there's a hell of a lot going on. We've seen some real volatility in the NASDAQ. Let's go back onto that daily chart because then you can kind of see it with a bit of perspective. But we reached record highs. So we reached record highs in June. And since then, we have been not always trending lower, but certainly in the past kind of week, there's been some real downside pressure. Now, what's happened in the last week that's changed maybe the outlook? Well, that is the earnings. So earnings season. So we got some earnings from the likes of Google and Tesla last week. There was real concern now about this AI infrastructure spend. This week, we have Meta, we have Microsoft, we have Apple, and we have Amazon reporting. So that will basically be the bulk of the Magnificent Seven. They're obviously the major hyperscalers. They're really critical to the AI trade. We're going to learn some really important information on Wednesday night and Thursday night about these key companies. So the NASDAQ is definitely focus of that because the hyperscalers are the Magnificent Seven. They are the main, the biggest companies included in the index. So they're going to have a massive outsized impact on the main US indices. So the NASDAQ 100 and also the S&P 500 too. As you can see, we are below the 50-day moving average. That comes in at 29,676. And we are above the 200-day, which comes in at 26,650-ish. We're currently trading just around 28,000. We have seen some real sharp sell-offs in certain elements of this index. So we have seen a decline in some of the chip makers. NVIDIA fell 5% on Monday. That's a big one, and it's expected to extend declines on Tuesday. That is a real big one because obviously NVIDIA is the world's most valuable company. So out of all of that Magnificent Seven, it has the biggest outsized impact on the index, and that's what happens when you have a $4 trillion valuation. But looking at certainly in the short term, as you can see, it does seem like we are in the short term anyway, momentum is to the downside, but it doesn't necessarily mean that we've finished with this, with kind of the rally in US stocks. It just really goes to show that Q2 was a really special quarter. As you can see here, pretty much from mid-March all the way through to mid-June, just absolutely rallied. I mean, it's not quite parabolic, but it looked fantastic, right? Particularly at the end of June. It was particularly as we moved into June up until kind of the peak around about the third week of June there. And then things started to just become a little bit on off. It was like one day we were down, the next day we were up, but there were much bigger swings as investors booked profits, but also as they just pondered about the AI trade. So the AI trade is really critical, but there are some really key risks associated with it. Number one, NVIDIA sold off really sharply yesterday. In fact, I'll bring up the NVIDIA chart because I think it's worth looking at. Sorry. Ooh. Massive loss yesterday, as you can see, slipped through the 50-day moving average, bearishness, certainly in the short to medium term. And we're now looking at the 200-day moving average, which comes in at $192.66, currently trading around about that 196.25. So we've got about kind of $4 on the downside to go before we get to that 200-day moving average. But I definitely think that this is something worth watching. When NVIDIA falls this much, you've got to take note. Firstly, because it's a massive chip maker. There were two reasons why it's fallen and why there's been some downside pressure, as you can see, building in NVIDIA recently, which then has a massive impact on the NASDAQ as well. Firstly, because extra Chinese competition. So CXMT is a big Chinese chip maker. They list on the stock market. They had a fantastic debut. China is also producing its own lithography machines. They are the critical tech infrastructure needed to make semiconductor chips, which means that they are, they're really serious. They're proper contenders now in terms of the AI race, and they really are contenders, and they threaten US dominance too. We've seen China in the past become real kind of disruptors of the US AI trade. It causes a lot of anxiety in the market, and I think that's what we're seeing now. But there are also domestic concerns too, because NVIDIA is announced yesterday that it was going to fund an OpenAI data center. This is the 10 gigawatt data center in Ohio that is being built through OpenAI. It's going to lend financing to that to the tune of $250 billion. That is a huge chunk of change. They're also going to spend potentially another $350 billion on giving them chips to create all the processors that's necessary for this world's biggest data center. So there's a fear about some circular financing that actually NVIDIA is, because it's done so well, it's got so much cash on its balance sheet, is now financing the likes of AI, but AI is meant to be how you monetize all of this AI capability and AI infrastructure. So there's just some doubts around that. That's playing out in the stock price, essentially. That whole argument about whether AI is profitable, that is playing out in the stock price, and this shows investor anxiety. Now I'm going to go back to the US 100, so the NASDAQ. Just to look at that, I would say, that looks like a pretty entrenched downtrend to me, certainly in the short to medium term. Again, this is a daily chart. If we just go back, let's look at it, just a slight shorter term chart. We are finding some level of support there at around about 27,800. So about 150 points away from where we are now, but we're still below the shorter term moving averages, which suggests momentum is to the downside too. So I do think that that there's a reckoning going on in tech at the moment, but we do have these earnings coming up, so we could be trading a bit sideways as we lead up to those earnings. And I think if we get the reception like we got from Google and Tesla, where the market just sold off Google and Tesla last week, that's going to be the sign that there will be more downside to come. And if I just switch back to my daily chart, just to show you some really key levels, again, it's that support level there, that 200-day support, which comes in, as I said, 26,660-ish. That is dynamic. It will obviously fall, but if we fall below that level in the next kind of 24, 48 hours, that will suggest like a bigger route. So at the moment, not a route. It looks like short-term momentum is definitely to the downside, but it doesn't look like we are, that this fabulous uptrend that we saw since Q2 is over. But that will change if we get through this 200-day moving average. So guys, thank you so much. We're going to do these weekly. We're going to continue in the next week or so, then take a little bit of a break over August, and then come back in September. So please do send in, tell your sales guys any questions that you'd like me to answer. But it's been really good speaking to you. So thanks so much, everyone.